Angeline Ong, and welcome to your look ahead to Friday, the 24th of November. Now, as traders in the US come back online after Thanksgiving festivities, we turn our attention back to the global economy and those expectations that the Fed may be done with raising interest rates. In Japan, it's all about consumer prices. We've got the core CPI reading, expectations for October, 3% year on year, staying above the Japanese central bank's 2% price target for a 19th straight month if we get that reading. And this is after a 2.8% rise in September as well. We also have the Jibun Bank Manufacturing and Services PMI flash data. But it's the consumer prices that will be key because core CPI hit a peak of 4.2% back in January. And it slowed below the 3% threshold for the first time in more than a year in September. That's as utility bills fell, reflecting the lagged impact of past oil price falls. Over on this cross, it also has to be said that, like most FX crosses, it's two sides of the story, and it's the US dollar on the other side. The dollar has been underperforming of late because of those expectations that the Fed might soon start cutting. Some traders saying as soon as spring. Now, US stocks ended higher on Wednesday on hopes that the Fed may be done raising interest rates and that the US economy might achieve that so-called soft landing. We had also data showing that the number of Americans filing new claims for unemployment benefits fell more than expected recently. And the minutes from the last Fed meeting showed a cautious approach towards monetary policy. And as a result, we have those hopes that the Fed is done at the moment for raising interest rates. Now, out of the UK, we have the GfK consumer sentiment, consumer confidence data. What is key about this is we had a chink of light from the US economic data front and the UK economic front today. Data showed that companies reported a marginal return to growth in November after 3 months of contraction. And what this PMI number did, let me just show you if I may, was it gave sterling a bit of a boost against the US dollar. If you can see here on my minute chart, I will show you what I mean by that in terms of a closer view there. In fact, you'll get a better look at this if we go perhaps to the hourly chart. There you have it. When that PMI number came out, you see this green bar there. Now, this was a chink of light because it came at the same time as we had data out of the Eurozone, which showed that business activity there contracted in November. This is according to the PMI survey data out on Thursday as well. Although it has to be said that those figures were slightly less bad than economists had expected. And staying in the Eurozone, we've got German Q3 GDP growth rate details coming out in the coming session. And the IFO business climate as well, the consensus there for November, 87.5. But the big set piece, the big event out there in terms of Friday is the US PMI flash reading. This is for manufacturing and services as well. Given that the US economy continues to be resilient on the labor front, many market watchers are expecting that this PMI flash figure will also mirror that. Well, that's it for now. For more market moving news, I'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Jeremy Naylor will be doing the same at 7:30 on early morning call to give you a heads up to the European trading session. Until then, follow me on Twitter at Angeline Ong. This is IGTV.